Palantir, a data titan on the rise. Palantir Technologies. Just the name sounds powerful, doesn't it? It's a name that resonates with strength and innovation, and for good reason. This company is a giant in the world of data analytics. They are at the forefront of transforming raw data into actionable insights. They build software that helps organizations make sense of massive amounts of information. Governments use it, big corporations use it. It's cutting-edge stuff. Their platforms are designed to integrate, visualize, and analyze data at a scale that was previously unimaginable. Financially, Palantir has made impressive strides. Their revenue is growing. Their losses are shrinking. This is a company that has shown resilience and adaptability in a highly competitive market. They're moving in the right direction. Investors are starting to take notice, and the stock prices reflect this growing confidence. The future looks bright for Palantir. Analysts are optimistic and the market trends are favorable. The company is poised for significant growth. This is a company with serious long-term potential. But hold on. Before you get too excited, it's important to consider all aspects. Before you rush out and buy a mountain of Palantir stock, let's take a breather. Investing is not just about riding the wave of excitement. Even the best companies can hit speed bumps in the market. Economic downturns, regulatory changes, and competitive pressures can all impact performance. Timing is everything in investing. Knowing when to buy and when to hold is crucial. It's not just about the company's potential, but also about market conditions. And right now, there are a few reasons why I'm hitting the pause button on Palantir. Market volatility, geopolitical tensions, and sector-specific challenges are all factors to consider. So while Palantir is indeed a data titan on the rise, a cautious approach might be the best strategy for now. Palantir is a Wall Street darling. The company has captured the imagination of investors and analysts alike. Analysts are falling over themselves to praise the company. They see it as a beacon of innovation and potential. They're predicting huge earnings growth, with some even forecasting that Palantir could redefine the industry. And that's great, but it also creates a problem. High expectations can be a double-edged sword. When expectations are sky high, even a small miss can send the stock tumbling. Investors can be unforgiving. It's like a high-wire act. One wrong step and it's a long way down. The pressure is immense. We've seen it before. A company beats earnings estimates by a penny, and the stock tanks. It's a harsh reality. Why? Because Wall Street was expecting a bigger beat. The market's reaction can be brutal. Palantir's next earnings report is coming up. The anticipation is palpable. All eyes will be on the numbers. Investors, analysts, and even competitors will be watching closely. If they knock it out of the park, the stock could soar. The rewards for meeting or exceeding expectations are enormous. But if they fall short, even slightly, get ready for a bumpy ride. The market's reaction can be swift and severe. The stakes are incredibly high. Palantir must navigate this landscape carefully. The company's future could hinge on these earnings reports. Success could propel them to new heights, while failure could lead to significant setbacks. It's a delicate balance. Palantir must manage expectations while delivering solid performance. As the earnings report date approaches, the tension builds. Everyone is waiting to see what will happen next. Will Palantir meet the lofty expectations set by Wall Street, or will they stumble under the weight of anticipation? Only time will tell. One thing is certain, the outcome will be closely watched and heavily scrutinized. For now, Palantir continues to work hard, striving to meet and exceed the high expectations placed upon them. The next chapter in Palantir's story is about to unfold. Stay tuned. Technical analysis. It's not voodoo, it's just looking at charts to see how a stock has traded in the past. And when you look at Palantir's chart, you see some warning signs. There are these things called resistance levels. Think of them like ceilings on the stock price. The stock has struggled to break through these levels in the past. It's like hitting a brick wall every time it tries to move higher. Now, Palantir could break through this resistance. Strong earnings could send the stock soaring, but until it does, those resistance levels are something to watch closely. Ever heard of a short squeeze? It's a fascinating phenomenon in the stock market. It's when investors who bet against a stock, known as short sellers, are forced to buy shares to cover their losses. This usually happens when the stock price starts to rise unexpectedly. This buying pressure can send the stock price through the roof, creating a rapid and often dramatic increase in value. Palantir has been a favorite target of short sellers in the past. The company's stock has seen significant volatility, making it a prime candidate for short selling. And we've seen some epic short squeezes in the stock. These events have led to massive gains for some investors who were able to capitalize on the sudden price spikes. But guess what? Short interest is now at a very low level. This means that the number of investors betting against Palantir has significantly decreased. There aren't many short sellers left to squeeze. This is a notable shift in the market dynamics for Palantir. This means that one of the catalysts that has driven Palantir's stock price in the past is no longer there. The absence of short sellers removes a key element of volatility. That doesn't mean the stock can't go up. There are still many factors that can influence the price, such as company performance, market trends, and investor sentiment. It just means one less potential rocket booster. Investors will need to look for other reasons to drive the stock higher, such as strong earnings reports, new product launches, or positive industry news. Understanding these market dynamics is crucial for making informed investment decisions. It's important to stay updated on the latest trends and news that can impact stock prices. So, while the days of dramatic short squeezes for Palantir might be behind us, the stock still holds potential. Keep an eye on the fundamentals and stay informed to navigate the ever-changing market landscape. In the end, a well-rounded investment strategy that considers multiple factors will always be more robust than relying on a single catalyst. Happy investing. Section 5. A pause, not a plunge. Timing the market for maximum gains. Let me be clear, I am not bearish on Palantir long-term. This is a fantastic company with a bright future. But in the stock market, timing is everything. And right now the stars aren't quite aligned for Palantir. We have sky-high expectations going into the earnings report, we have technical resistance on the charts, and we have low short interest. These factors suggest that the stock might be due for a breather. This is not the time to be reckless. Don't go all in on Palantir, be patient, wait for a better entry point. Section 6. The power of patience. Waiting for the right opportunity. Investing is a marathon, not a sprint. The goal is to buy low and sell high, but it's easy to get caught up in the excitement and FOMO or fear of missing out. We see a stock going up and we want in. But sometimes the best thing to do is nothing. Wait for the stock to come down to a more attractive level. Wait for the hype to die down. Wait for a better risk-reward setup. Patience is a virtue, especially in investing. Don't chase Palantir, let it come to you. Section 7. Alternative investments exploring other avenues. While we wait for a better time to buy Palantir, let's not forget that there are thousands of other stocks out there. There are always opportunities in the market. Consider exploring other sectors or industries. Look for companies with strong fundamentals and a history of growth. Diversify your portfolio. Don't put all your eggs in one basket. Spread your bets and manage your risk. Section 8. Risk management. Protecting your portfolio. Speaking of risk management, it's crucial to protect your hard-earned money. Never invest more than you can afford to lose. Set stop-loss orders to limit your potential downside. Remember, the market can be irrational in the short term. Don't let emotions guide your investment decisions. Have a plan and stick to it. Protect your capital. That's rule number 1 in investing. Section 9. The future of Palantir long-term outlook remains bright. I want to emphasize again that I am bullish on Palantir's long-term prospects. They are a leader in a rapidly growing industry. Their technology is in high demand, and they have a strong management team. The future is bright for Palantir, but that doesn't mean the stock will go up in a straight line. There will be bumps along the way, there will be pullbacks. That's just the nature of the market. The key is to be patient and disciplined. Wait for the right opportunity to buy, and when you do buy, don't be afraid to hold for the long term. Section 10. Conclusion. A calculated approach to investment. Investing is not about following the herd. It's about making informed decisions based on research, analysis, and a healthy dose of skepticism. Right now, there are valid reasons to be cautious about buying Palantir stock. But that doesn't mean it's a bad investment, it just means it's not the right time to buy yet. Remember, fortunes are made in the market by being patient, disciplined, and a little bit contrarian. Don't be afraid to go against the grain. Do your own research, make your own decisions. Section 11, disclaimer, proceed with caution. One last thing, I am not a financial advisor. This is not investment advice. Do your own research and consult with a professional before making any investment.